The current live stock price for Navitas Semiconductor, ticker symbol NVTS, stands at $13.525. Investors often look at this figure and see a simple number, but if you look past the ticker, you will find a quiet intensity brewing in the power electronics sector that most retail traders are currently ignoring. While the general consensus around Nvts is often tied to the volatility of semiconductor stocks at large, the reality here is that Navitas is positioning itself in a specific technical niche that could shift its valuation model entirely if execution remains disciplined over the next few quarters. Many people assume this is just another high beta play, but the underlying work in gallium nitride technology suggests a more structural shift in how we handle energy efficiency in the data centers that are driving the current computational heavy lifting. When you start your own path in the markets using tools like Fidelity or the Fidelity trading platform, it is easy to get caught up in the noise of daily fluctuations, especially with stocks like NVTS. You might see a move in Nvidia stock or look at the broader trends in Apple stock and assume that a semiconductor company is just a proxy for the general sector. That is a mistake. The reality of Navitas is that its business model is fundamentally different from the giants. They are betting on power conversion efficiency. If you are using interactive brokers to manage your portfolio, or even if you are just starting your online investment journey through the Robinhood app, understanding the difference between general chip manufacturing and specialized power components is critical. Most people believe that the future of energy efficiency is purely a software or infrastructure problem. The reality is that the physical hardware, the actual transistors managing power flow, are becoming a massive bottleneck. This is where the tension lies. The market expects Navitas to scale as if it were a consumer electronics brand, but their reality is more akin to a high-end materials engineering firm. If they cannot bridge the gap between their current GAAP losses and the operational cash flow needed to sustain their research and development, the market will punish them regardless of the quality of their technology. When you use SoFi Invest or manage your assets via the Fidelity mobile app, you are likely looking for growth and stability. Navitas, however, is not a set-it-and-forget-it stock. It's a high-conviction bet on whether the industry can successfully transition to gallium nitride across the board. Comment below how many shares of NVTS you currently hold. It's always interesting to see how the community balances their risk in these more speculative areas of the semiconductor space. Consider the recent institutional activity. You see large holders like BlackRock maintaining positions, which provides a layer of institutional legitimacy that retail investors often overlook when the stock is in a drawdown. However, retail sentiment is fickle. If you are using Robinhood stock trading features or relying on the SoFi Robo-Advisor, you might see automated alerts that push you to buy or sell based on technical indicators alone. Do not fall into that trap. The story of Navitas is told in the earnings calls and the technical specifications of their products, not just the moving averages on your screen. If you are looking at your Fidelity brokerage account and wondering why NVTS acts differently than your typical defensive positions, remember the industry. The semiconductor sector is currently under pressure from macroeconomic shifts and shifting demand for AI-specific hardware. While Nvidia stock dominates the headlines for GPU performance, the power delivery systems, the very things Navitas produces, are becoming increasingly important. Without efficient power management, these massive data centers are simply too expensive to cool and run. That's a reality that exceeds the simple expectation that they are just another chip company. The business model here is quite elegant in its simplicity. They are focusing on the replacement of silicon with gallium nitride, which allows for smaller, faster, and more efficient power electronics. This is relevant for everything from mobile chargers to the massive power systems needed for the latest artificial intelligence clusters. Think about it. If you can reduce the physical size of the power components in a device by 40%, you have essentially changed the design constraints for the entire product. This is why the industry is watching them so closely. However, the risk is always in the manufacturing scaling. Building these components is not cheap, and the yield rates are the difference between a profitable quarter and a massive write-down. Many investors using the Fidelity Trading Platform or Interactive Brokers platform are often frustrated by the time it takes for these structural shifts to manifest in the share price. You want to see the gain immediately, but this is where professional, long-term thinking pays off. If you are managing your portfolio, consider how this fits into your broader allocation. Are you using Schwab Intelligent Portfolios to balance your exposure? Navitas is an aggressive growth play, and it should be treated as such. It is not an alternative to an index fund or a substitute for a blue-chip dividend stock. It's a component of a high-growth strategy that requires patience. Let's look at the trading volume we've seen over the past month. It's been significant. When you see high volume without a corresponding massive breakout in price, it tells you that there is a battle happening between those who see the long-term value in the gallium nitride transition and those who are fearful of the short-term financial headwinds. The bears point to the net income losses, which are substantial, while the bulls point to the revenue growth and the strategic partnerships in the EV and data center spaces. The reality of these earnings is that they are missing estimates by margins that would be unacceptable in a more mature company. However, for a company in this phase, the focus is on market penetration. They need to get their technology into the hands of the Tier 1 manufacturers who will then bake it into the next generation of server racks and consumer devices. Once that lock-in happens, the revenue becomes much more predictable and the operational leverage begins to work in their favor. When you use SoFi Invest or manage your holdings in Robinhood Investments, you should ask yourself if you are buying a company or a story. With Navitas, the story is compelling, but the company must prove it can execute. We've seen this happen before in the semiconductor industry, where a promising technology struggles to get past the initial hurdle of mass market adoption. Will Navitas be the one to define the standard, or will it be a footnote in the history of power electronics? The upcoming earnings releases will be critical. You should be watching the guidance, not just the historical data. The management team at Navitas has been emphasizing their pivot toward the AI sector, and that's a smart move. The demand for AI hardware is currently the largest capital expenditure in the tech world. If they can position their power components as the must-have for these new AI-focused data centers, they could see a massive surge in demand. But again, this is about execution. It's about getting the parts manufactured at scale and delivered on time. If you are using Fidelity Wealth Management Services or managing your own Fidelity IRAs, you might want to look at the broader semiconductor ETFs to see how much exposure you already have. Sometimes it makes more sense to hold a basket of these companies rather than trying to pick the individual winner in the power conversion space. However, if you have a high risk tolerance and a belief in the specific technological edge of gallium nitride, the risk-reward profile of Navitas is certainly different from the rest of the pack. Look at the way the stock handles market volatility. It has beta characteristics that suggest it will move more than the market when the market moves, and that can work for you or against you. Using a Fidelity brokerage account allows you to set up alerts and limit orders, which is vital when trading a stock with this level of sensitivity to sector-wide news. Don't be the person who gets wiped out because you didn't have a plan. Trading this requires a cool head and a willingness to accept that the road to success will have sharp corners. As we look toward the end of the year, the macroeconomic climate will play a huge role. Interest rates, inflation, and the strength of the dollar all impact companies like Navitas. If rates stay high, the cost of capital for these growth-heavy businesses remains an issue. The market knows this, which is why the price is often range-bound. Investors are waiting for the signal that the company is turning the corner towards self-sustainment. Until then, you can expect the volatility to continue. When you compare Navitas to its peers in the semiconductor space, the PE ratio and other standard metrics often fall short or look downright alarming. You cannot value a company in this phase using the same tools you use for a mature company that has been profitable for 20 years. This is about potential, the total addressable market, and the moat they are building through their patent portfolio and engineering talent. For those fans of self-investing, you know that the most rewarding trades are often the ones that others have dismissed or ignored. Navitas has had its fair share of skeptics. The question is whether those skeptics are missing something fundamental about the shift in power electronics. The data suggests that we are moving towards a world where efficiency is more important than raw power, and that shift is entirely in favor of companies that can innovate in the material space. In closing, Navitas Semiconductor is a company that sits at the intersection of a massive industry shift and a difficult operational challenge. The expectation is that they will solve the power efficiency puzzle for the next generation of computing. The reality is that they are fighting a daily battle to keep costs down and quality up while scaling their business. It's a high-stakes, high-reward situation that demands your attention if you are interested in the future of the semiconductor landscape. Whether you are using Fidelity, Robinhood, SoFi, or Interactive Brokers, the key is to stay informed, stay disciplined, and always be ready to reevaluate